Have the House come to order. The honourable member for Macmillan.
I wish to address my question to the Treasurer. Has the Treasurer's attention been drawn to a report regarding a proposal to retrospectively abolish the existing capital gains tax? If so, what are the intentions of the government in this matter, and what are the implications of this proposal for Commonwealth revenue?
The honourable Treasurer. Order.
Mr Speaker, I remind the House that
Order. There is far too much noise.
I remind the House, Mr Speaker, that the capital gains tax has played a major part in restoring fairness to the tax system. With the simple proposition, why should somebody who gets their income from buying and selling property or shares pay no tax, while millions of ordinary wage and salary earners automatically pay their tax each week? Capital gains has shifted the tax system to support productive investment, where before its presence, passive speculative investment was rewarded with capital gains free income. And now that capital gains is taxed, income from capital gains is taxed as the same as any other form of income. Therefore, investment is being channelled into those areas of the economy which produce dynamic income, which produce employment, which produce growth and which produce activity. And it is only through growth and activity that we can see the current account deficit of Australia change. And of course, it is completely torn away at the underpinnings of the tax avoidance industry, which tried to turn all forms of income into a taxable capital gains type income so as to escape capital gains tax, to escape taxation. In other words, the whole tax avoidance industry was about changing the nature of income from income to capital so that they would escape tax. And, Mr Speaker, the amount of revenue generated by the tax proves the very point. This year it's $500 million alone. There's $500 million in the budget for capital gains taxation accruing to the Commonwealth. But if it were to be abolished, as is proposed by the Coalition, property prices would skyrocket and investors would flood back into the market. In essence, any proposal to abolish the capital gains tax is no plan for increasing investment or national savings. There is this argument about, particularly from the Coalition, that you abolish capital gains to increase investment in national savings, when the converse would clearly be the case. It would benefit only less than 1% of individual taxpayers who actually pay capital gains tax. I've had these figures checked. Less than 1% of individual taxpayers pay capital gains tax, and would do nothing, in fact penalise the 99% of individual taxpayers not liable for capital gains tax liability. But
Order. There's far too much noise in the chamber. The member for O'Connor. The honourable Treasurer.
But Mr Speaker, as recent media articles have pointed out, the significance of the proposal put by the Coalition is this. The opposition is making a commitment not only to abolish the government's capital gains tax, but to backdate the effect of its abolition to the 19th of September 1985. In other words, the word retrospective legislation used to apply to a tax penalty applied retrospectively. This is a benefit applied retrospectively. This is reverse retrospectivity. It's a benefit, not a penalty applied retrospectivity. And as a result, an enormous dislocation in the property and share markets would ensue as people with accrued capital gains sought to cash in on the windfall gains gratis of the Leader of the Opposition. So the billions of capital gains liability, which is now sitting in the system unrealised, would be realised that all this property came on the market, was cashed in on the market. And who would be the granddaddy of the casher-inners? Well, of course, that champion of the working class, the President of the Liberal Party himself, Mr Elliott. The person who says that people on unemployment benefits are bludgers. While next month Mr Elliott will be sitting on over 11.5 million bonus shares in Elders IXL in respect of 15.5 million 1 cent paid ordinary shares directly held in the company by him, for which he has paid $155,000. And on a on a contingent capital gains basis. And what are the contingent capital gains attaching to these bonus shares? What are they worth upon realisation? The answer is that Mr Elliott is sitting on a potential capital gain now of around $35 million. He's paid $155,000. He's sitting on $35 million. A gain that would continue to be taxable if the opposition decided as a government to remove the capital gains tax from the date of election of the government. That gain would continue to be taxable. But it will not continue to be taxable if there is the retrospectivity applies, because as I understand it, that these shares were taken out somewhere between June and September 1987. So come September 1992, if they were realised, there'd be a contingent tax liability to the Commonwealth of about $17 million, which would be a $17 million benefit, which would accrue, in this case, to Mr Elliott by virtue of the fact that the measure is retrospective to 1985. Not that the measure should be cancelled, but that from the date of introduction by a coalition government, but by virtue of the fact that it's retrospectivity. So, Mr Speaker, is there any wonder the so-called speculative gains tax has been backdated? Is it any wonder that we see a position where there's a few dollars for the families with kids, there's a few dollars for the families with kids, and $17 million for the Liberal Party's boss? That's the kind of equity we'll see from a coalition government. 1% of taxpayers affected, the billions of dollars of unrealised capital gains liability handed back to them. No transfer of wealth would ever, there's no country in the world would have ever witnessed a transfer of wealth on one shabby government decision like that anticipated by you for a retrospective benefit conferred on these people from 1985. That is, the billions of unrealised capital gains contingent liability accruing in the name of the Commonwealth is to be given back while you throw a couple of dollars at some rebate for families, a couple of dollars, while you hand $17 billion and you take the unemployed and beat them around and send them out to the St Vincent de Paul, to the Smith family, to the Salvation Army, as you turn 100,000 people off the unemployment benefit queues. Now, this is the sort of morality of your party. And why it's not only immoral, but as the Financial Review said yesterday, it has no philosophical basis either. It's got no philosophical basis, because you lopside the tax system, and instead of the tax system supporting dynamic, income-producing, employing activity, you'll go on to supporting capital gains-free benefits for passive investments. And how you think we can dig our way out of a capital gains hole, out of a current account hole like we're in, with the nation investing in blocks of flats again and open space property, and not in companies and not in capital formation, is beyond me. So not only are you lopsiding the tax system, but you want to give your mates billions. You want to give, and your principal mate, the bloke who runs your party, you want to give him a $17 million benefit. So is it any wonder your shabby proposal is backdated to September 1985? Is it any wonder you're in there doing what you usually have always done, looking after the people who really bludge on Australian society, the people who don't pay their tax?